The Naira continues to strengthen at the FX interbank market. I'll be speaking to Emmanuel Odiaka, a fixed income trader at UBA, to get an update on that space. Emmanuel, it's great to have you on the show. Now, as I said, the Naira continued to strengthen yesterday at the FX interbank market. Did we have a third session of gains today?
Well, the Naira has been holding its own against the greenback, but basically with activities in today's market, one could rightly say that the market traded flat and is just consolidating its space. Rates have been hovering about 162.75, 90 levels. Despite oil major sales, we have not seen any major impact. Market direction would likely gauge the influence of possibly NNPC sales in the coming weeks ahead.
Now, there was an IRDAS settlement today. We hear of 54 billion Naira, which is not sufficient to offset the liquidity in the system. Do you expect CBN to consider almost sales, especially given the maturities that are coming on Thursday?
Oh, well, yeah, with NTB auction coming up in a few days' time, specifically on the 9th next week. Well, OMO remains a monetary tool for the Apex Bank to continue to mop up and guide the market liquidity position. With market opening at about 390 billion at the interbank levels today, what could rightly say that with possibly withdrawals from NNPC, foreign exchange sales, and NTB auction coming up into next week, OMO remains a possibility, but I think the Apex Bank would want to see the liquidity levels as are then to make that move.
So say we do have an OMO auction this week, what impact will that have on the market?
Well, basically, the interbank market would feel a little bit liquidity squeeze, and we could see rates go up to about 11%. Presently, market is trading between 10.5% and that remained flat at that. So if there's an OMO auction, that would take a little bit liquidity from the system and take the interbank offer rate to about 11%.
Now, sentiments in the T-bills market reversed yesterday as attractive yield spread demand across some maturities. Are there any changes in the T-bills market direction today at all?
No, market still traded about flat. Most of the activities was centered at the bond space rather than the T-bill space. I think market would want to wait for direction for the upcoming auction to gauge its sentiments and see exactly where it will head to on the yield curve.
I assume you're talking about the June 10th, 2014, which is approaching. How is the market preparing for that auction?
Well,
July 10th.
Yes. With the liquidity still in the system, the game plan is that market would continue to mop up the NTB, the Treasury bills offer. We would see a strong showing, especially with sentiment still very strong on a likely reversal of policy by the Apex Bank from a contractionary position to a more accommodating monetary stance. So it's going to be an interesting NTB auction, and we think yields will likely continue to ease across the offers.
So you feel that yields at current levels does offer room for further compression?
Yes, certainly. With what we are saying, if there's any slight gauge in monetary policy tool, taking interest rate further down, we could see yields go back to 9% to 10% at most on the average, because in the secondary market, the one-year bill has been traded to as low as 9.95. So that gives you a sense of market view of future interest rates outcome.
Let's talk bonds, because we saw demand strengthening in yesterday's session. Any changes today?
Well, market went further bullish today, breaking the 12.2% barrier especially on the 10-year bond, which has been trading slightly above 12%. Today, trade to as low as 11.9%, 11.7%. And that gives strong indication of an overwhelming interest coming back from offshore from what we saw today in today's market. And that makes the next auction very, very, very interesting ahead of MPC.
Where are you seeing the most activity?
Well, activities cut across the curve, both at the short end and on the long end. But what we saw towards close of day was there was more of a maturity switch from the short end of the curve to the longer end, and that's a very interesting move for traders to be keen on.
Are we starting to see investors taking position ahead of the monthly bond auction that's supposed to take place on the 16th of July?
Yes, certainly that's what's happening in the market, because with market breaking the 12% barrier on the 24th, ahead of a new issue which would be a likely 2034 issue, a 20-year bond, that would change a lot of dynamics in the market. But it seems investors are confident with 12% levels. And the fear is that with forward guidance of a likely interest rate cut, we may likely be seeing the last of the 12% yields in the market.